Hey everyone, thanks for joining us today for our Corporate Venture Capital briefing. We're going to give everyone just another minute or two to join and then we'll get started. Thanks. Okay everyone, thanks for waiting. My name is Riley from CB Insights and I'll be walking you through a few housekeeping items before turning over to Alex for the presentation. First, don't worry about taking notes as we'll be sending both the slides and the recording to you right after the webinar. Second, if you have any technical difficulties during the webinar, your best bet is to reach out to the Citrix Help Desk. You can also tweet at us or send an email to webinar@cbinsights.com and we'll do our best to help. But again, we'll send everything out afterwards, so don't worry too much. Okay, so as with all of our webinars, we'll be moving through a lot of data and insights and doing it pretty quickly. But we also want to make sure we're answering your questions and keeping things relevant. So throughout the webinar, feel free to ask us questions using the questions tab within GoToWebinar or via Twitter using the hashtag CBICVC. So a little bit on CB Insights. We're a data science and machine learning organization backed by Pilot Growth Equity and the National Science Foundation. We track every private company in the world and all the investment and financing activity related to them to help our clients answer questions about major trends, competitor strategy, potential disruptors, and much more. Here you can see a few of our happy customers. Okay, so I've got something really exciting to announce. CB Insights is starting a new event called Councils. So basically at our conferences, we host breakfasts for senior level execs. They've become a surprise hit, getting consistently rave reviews for a more intimate opportunity to share insights. And as a result, we're launching these CB Insights Councils to bring together senior execs to discuss their biggest growth, strategic, and innovation challenges with peers. The first several two-day in-person councils will be held in New York City and Silicon Valley later this year. Membership is by invitation only, and councils must meet the following 3 criteria. Must be SVPs, EVPs, presidents, or C-level executives. They must be at companies with $1 billion in revenue or more, and must be the head of their respective business unit or group or function. Members generally come from corporate strategy, innovation, venture, M&A, digital strategy, and technology. To be considered for Council's membership, please email community@cbinsights.com or visit www.events.cbinsights.com/councils. So a little bit on Alex. Alex is a tech industry analyst here at CB Insights. Before joining CB Insights, Alex held roles at Simpson Thacher and Bartlett and the Blackstone Group and is a graduate of Vanderbilt University. He's been cited in the New York Times, Financial Times, and the Wall Street Journal, and more. I'm going to hand it off to him for the presentation.
Thanks, Riley, and thanks everyone for joining. We have an interesting briefing prepared for you all today, which we'll try to get through fairly quickly. This briefing is an adaptation of the CBC report for the first half of 2017, which we suggest downloading from CB Insights. In the next 25 minutes, we'll summarize some notable high-level trends, spotlight corporate venture capital investment activity to the AI sector, take a deep dive into global investment trends, and finish with an examination of the US market. Before beginning, we think it would be beneficial to level set and outline what we mean when we discuss corporate venture capital. Harvard Business School professor Henry Chesborough has an often cited definition of CVC, which we've used to inform our analysis. For the purposes of our briefing, we define CVC as the investment of corporate funds directly in external startup companies, where those funds are distributed from a venture investment entity and not from the company's balance sheet. CVC excludes investments made through external funds managed by third parties and/or investments made to internal corporate efforts. We also think it's worth considering what the value proposition is for CVC investment. From a startup's perspective, they obviously receive investment capital, operating expertise, and a go-to-market strategy, particularly in terms of customer acquisition. From a corporate perspective, corporations can gain a return on their investment and/or strategic additions to their business, as well as fundamentally an engagement with emerging technologies from a research and development perspective. To start, we think it's worth reviewing some high-level trends from the first half of 2017. Firstly, global CVC deal activity jumped back in the first half of 2017. Deals increased 26% in Q1 17, recovering from a slump in the fourth quarter of 2016. Second, there's been a 191% increase in CVC investors since 2012. 262 CVCs actively invested in the second quarter of 2017, the largest number since Q1 2012. Third, U.S. active CVC investment increased in 2017. 143 CVC investors actively invested per quarter in the first half of 2017, compared to 127 throughout 2016, as deal activity increased 18% in the first quarter of 2017. Fourth, Alphabet has been a prolific corporate venture capital investor. Its CVC entity, Google Ventures, or GV, was the most active CVC investor globally in the first half of 2017. GV and Capital G have invested in the most unicorns of any CVC investors as well. Fifth, and lastly, artificial intelligence funding has exploded in the first half of 2017. CVC participating investment to artificial intelligence companies has already outpaced full year 2016, and deals are on pace to exceed 2016 totals as well. We'll begin with the last top-level trend discussed and spotlight CVC investment to artificial intelligence. Funding with CVC participation to AI companies has already outpaced 2016 full-year totals. Deal activity has increased 21% in the first quarter of 2017, while capital invested increased by 134% over the second half of 2016. CVC deal share to AI companies by subsectors shows a concentration in cybersecurity. 15% of CVC deals in AI went to companies focused on cybersecurity, making it the subsector with the most AI investment exclusive of companies working horizontally across multiple verticals. The most active CVC investors to AI from 2012 onwards are Intel Capital and GV. Intel Capital has made select investments in DataRobot, Element AI, and Vectra Networks, while GV has made select investments in Flatiron Health, Shape Security, and Orbital Insight. GV's investment activity fits in with broader Alphabet strategies. In April of 2016, Google CEO Sundar Pichai laid out the company's plan to become AI first. We took a look at Alphabet's investment activity in AI. Alphabet's various corporate entities have made a series of acquisitions or investments, notably acquiring DeepMind in 2014 and most recently announcing Gradient Ventures, and a dedicated AI fund. Other tech investors have not shied away from investing in AI via their CVC funds as well, however. Salesforce Ventures, Microsoft Ventures, and Intel Capital have made a slew of investments in AI with their CVC arms. Microsoft Ventures and Intel Capital have co-invested in 3 AI companies since 2012. Non-tech companies have also found reason to develop an AI focus. Toyota recently launched Toyota AI Ventures, which is committed to invest $100 million in artificial intelligence, cloud, data, robotics, and autonomous vehicle technologies. Corporates have not shied away from outright acquisitions either. Alphabet has made the most acquisitions in the space. We also recently surfaced Facebook's July acquisition of Oslo, which is being rolled into Facebook Messenger. In summary, it's clear that AI is a category that corporations as well as venture capitalists have turned their attention to. Some companies are simply acquiring AI startups. Others are focusing on developing AI capability in-house, or are relying on their corporate venture arms to invest in emerging companies as a way of staying close to the action. A rare few are doing all three. Now we'll take a deep dive into CVC investment activity globally. Globally, corporate VCs participated in $13.3 billion of funding across 798 deals in the first half of 2017. On an annual basis, CVC has started off 2017 strong. Through the first half of 2017, CVC investment activity increased 12% over the second half of 2016 in terms of deals completed, and 8% in total capital invested on a participation basis. On a quarterly basis, deals rebounded significantly in the first quarter of 2017, increasing 26% over the fourth quarter of 2016. The second quarter of 2017 saw deal activity decrease by 3% from the previous quarter, but quarterly funding remained nearly the same at $6.6 billion invested. Examining global CVC deal share by continent, the major takeaway here is that European deal share receded through the first half of 2017. Examining CVC deal share by series, the major takeaway for the first half of 2017 is that early stage deals took nearly half of deal share. Examining deal share by sector, the main takeaway is that internet and mobile deals accounted for 60% of deal share in the first half of 2017. CVC investment to the internet sector recovered in part. In the first quarter of 2017, deal activity increased by 29% and funding participation increased 50% between the first quarter of 2017 and the second quarter. CVC investment activity to mobile increased by 22% in the first quarter of 2017 to 71 deals, the largest quarter since the first quarter of 2015. CVC investment to healthcare increased in the first half of 2017. Deals to healthcare companies with CVC participation increased by 16% in the first half of 2017 as compared to the second half of 2016. Additionally, breaking out CVC deal share to healthcare by continent shows a surge in deal share back to North America. In the first quarter of 2017, North American CVC investment into healthcare deals increased from 47% of deal share to 67%, while European deal share decreased 24 percentage points to 18% of deal share. In a comparison of quarterly CVC to overall VC investment, it's observable that CVC activity dropped in the second quarter of 2017, while VC investment rose. VC investment increased 6% in the second quarter of 2017, while CVC investment declined 3% after increasing 26% in the first quarter. CVC investment as a percentage of all VC investment has been at or above 18% since the second quarter of 2015. CVC investors participated in 21% of all deals in the first quarter of 2017 and 19% in the second quarter. CVC average deal size compared to VC average deal size shows VC deals rising relative to corporate venture capital. In the first half of 2017, CVC average deal size was $20.5 million, while VC average deal size increased from $13 million in the second half of 2016 to $15.5 million in the first half of 2017. Comparing CVC investment to direct corporate investment it's apparent that direct corporate investment is on the rise. CVC-only deals increased by 24% in the first quarter of 2017, but flattened in the second quarter. Direct corporate investment increased in both quarters of the first half of 2017, and exclusive of the fourth quarter of 2016, has risen substantially on a quarterly basis since the fourth quarter of 2015. On a quarterly basis, the number of active global corporate investors has been increasing since 2012. In fact, there has been a 191% increase in CVC investors since the first quarter of 2012. The number of corporate venture investors actively investing increased 23% in the first quarter of 2017 to 257, and 262 actively invested in the second quarter of 2017, accounting for the most corporate investors since 2012. On an annual basis, 136 unique CVC investors participated in at least one seed financing round in the first half of 2017. This represents a 72% increase over the second half of 2016. The number of new CVC groups making their first investments also is impressive through the first half of 2017. 102 new corporate venture capital arms invested in the first half of 2017. This amounts to 65% growth over the second half of 2016. New CVC funds include NASDAQ Ventures and Boeing Horizon X of NASDAQ and Boeing respectively. But we've also noticed some notable new CVC arms from cybersecurity companies. Cybersecurity giant Symantec launched a CVC arm in the first quarter of 2017. The cybersecurity company intends to contribute investment capital to startups, as well as allow companies to build on the company's integrated cyber defense platform for enterprises. Their CEO, Greg Clark, said of the new fund, Symantec Ventures intends to help entrepreneurs build on the infrastructure that sits at the heart of the security posture of our customers. And Japanese cybersecurity incumbent Trend Micro also launched a CVC arm in the second quarter of 2017. Their CEO, Eva Chen, claims their focus will be on the Internet of Things. CVC investment to the cybersecurity space has been impressive through the first half of 2017, as CVCs participated in $718 million of participating investment capital distributed across 40 deals. Based on the level of investment with corporate participation to date, investment to the space is on pace to surpass full year 2016 totals. The most active CVC investor globally was Google Ventures, GV, making more than 35 investments in the first half of 2017. GE Ventures made the second most investments, followed by Microsoft Ventures, while Qualcomm Ventures and Intel Capital tied for fourth. And the most active CVCs in current unicorns, or companies with a private market valuation of $1 billion or more, was topped by two of Alphabet's CVC arms, GV and Capital G. Set forth here are the top 100 most active CVCs for the first half of 2017. Before moving to the US market, we're going to briefly take a look at the UK, India, and China markets. In the UK, CVC activity rebounded through the first half of 2017. CVC deal activity in the UK increased in both quarters of 2017, but funding participation remained low. Notable deals in the UK included a $40 million Series B to Blockchain. Blockchain's investors include GV, as well as Lightspeed venture partners Richard Branson and the Virgin Group, among others. In the India market, CVC activity returned to form. In the first half of 2017, deal activity increased substantially from the fourth quarter of 2016. Notable deals included a $55 million Series D to Practo Technologies. Notable investors in Practo Technologies include Capital G, Sequoia Capital India, Tencent Holdings, and Thrive Capital, among others. In the China market, CVC deal activity increased 64% from the 28 investments that occurred in the second half of 2016, as $1.6 billion in capital was invested across 46 deals. Now we'll turn to CVC activity in the U.S. market. On a quarterly basis, U.S. CVC activity increased in the first half of 2017, increasing 18% over the fourth quarter of 2016, reaching 209 deals. Funding participation also increased, rising 20% in the first half of 2017 as compared to the second half of 2016. In terms of CVC deal share by state, the important takeaway here is that California deal share increased in the first quarter of 2017. In terms of deal share by series, the major takeaway here is that Series A deal share grew significantly in the second quarter of 2017 to 32%. When examining CVC deal share by sector, the largest takeaway here is the growth in healthcare deal share, increasing from 11% in the fourth quarter of 2016 to 16% on average in the first half of 2017. Comparing U.S. CVC activity to overall venture capital activity in the U.S. market, it is observable that CVC activity has been relatively range-bound as compared to overall VC activity since the drop in overall activity in the third quarter of 2015. CVC investment as a percentage of overall VC deals averaged 22.5% in the first half of 2017, and CVCs have participated in at least 20% of all VC deals since the third quarter of 2015. The number of active CVCs in the U.S. market has increased on a quarterly basis since 2012. 148 CVC funds invested actively in the first quarter of 2017, a 23% increase over the fourth quarter of 2016. On average, 143 investors actively invested per quarter in the first half of 2017, compared to 127 investors throughout 2016. Comparing CVC average deal size to VC average deal size in the U.S. market, CVC deal sizes have held steady at $25 million. In the second quarter of 2017, average CVC deal size increased to $26 million, but VC averages also jumped from $15 million to $19 million. The most active U.S. CVCs in the first half of 2017 were GV and First, making select investments in Clover Health, Freenome, and Magenta Therapeutics. GV was followed by GE Ventures, Microsoft Ventures, Salesforce Ventures, Intel Capital, and Qualcomm Ventures, rounding out the top 5 most active CVCs investing in the U.S. market. Lastly, before finishing, we'll quickly examine CVC activity in California, New York, and Massachusetts. California investment activity with CVC participation increased substantially in the first half of 2017 as compared to the fourth quarter of 2016. CVCs participated in $2.9 billion of investment distributed across 103 deals in Q1 17. A 29% increase in deal activity and a 93% increase in capital invested as compared to the fourth quarter of 2016. New York investment activity with CVC participation flattened in the first half of 2017 after falling in the second quarter of 2016. 27 deals were completed in the first quarter of 2017, down 3 from the quarter before. Funding participation increased in the second quarter of 2017, however, rising by 83% over the first quarter of 2017. Massachusetts deal activity with CVC participation increased by 7% in the first half of 2017 as compared to the second half of 2016, while funding with CVC participation increased by 44%. Notably, CVC investment in Massachusetts shows a renewed focus on healthcare in the first half of 2017. CVC funds invested heavily in the healthcare sector in the first half of 2017, an area of historical strength for the Massachusetts market. Healthcare deals accounted for 44% of deal share, as internet deals decreased by half from from 40% in the second half of 2016 to 18% in the first half of 2017. So now we'll take some questions. One question that immediately jumps out is what other sectors show promise for CVC investment? I think exclusive of the trends we're seeing in AI and cybersecurity, or AI and cybersecurity, one sector that might be ripe for CVC investment or could see an increase in CVC investment activity is agricultural technology, or ag tech. This is an area that I think shows strong promise for CVC as well as venture capital investment more broadly. It's an area, I think, in which we've seen inventive business strategy and a willingness to invest in new technology. I think some recent examples of inventive business strategy might include, John Deere's willingness to expand into lending and financial services lending products. They've been joined here by DuPont, Dow Chemical, and Monsanto. I think accordingly, we're going to keep a close eye on CVC activity in this space, particularly active funds like the Monsanto Growth Ventures CVC arm. I think additionally, ever since SoftBank's investment in Plenty, with the vertical farming startup, ag tech is a space where we could see corporates more actively get involved in. I think, for instance, just yesterday on August 9th, we saw DuPont agree to acquire Granular, which is a San Francisco-based software and analytics tool for farms. So I think generally ag tech should be a space to watch for CVC investment activity. Another question we see here is related to SoftBank. Speaking of SoftBank, this is a question about how SoftBank's Vision Fund and large check investments might affect CVC investment more broadly. So, while SoftBank is not considered a CVC, SoftBank is definitely writing some pretty big checks, like a CVC would, and definitely offering some of the strategic partnership value that I think a CVC would provide. We're keeping a close eye on what kinds of co-investment occurs in their rounds with CVCs. But I think we're definitely going to wait and see at this point as to the Vision Fund's effect on corporate investment. That's all we have prepared for you today. Thanks very much for tuning in. Please note that the full presentation and recording will be distributed.